All right, what's up, everyone? Welcome to today's live trading room at the 5ers. I forgot what I was going to say here, but live trading room with the 5ers, the #1 live trading Forex channel and show on YouTube. I hope you guys had a wonderful weekend. I had a fantastic weekend. I was on a 5K race running, and I'm almost dead, but I'm here. I've survived. Victor, how's your weekend been?
Hi everyone. Yes, I am. My weekend has been great. I haven't had a run, not a 5K run, anyways. But how did it go, by the way? How did you go? How did you finish? How was the finish time?
Well, it went okay. So first of all, so once upon a time, I did run quite a lot. I haven't done that now. I've gained a couple of pounds and all of that, but I'm getting into it again. And this track was just insane. Like the first 1K was basically a straight up, and at the end of that 1K you had a hill that you basically had to almost crawl up on. Like that was crazy. So my heart rate was 185 in the first kilometer, which is like I'm completely burned out, right? So I had an average heart rate of 180 throughout that whole time, and I got in at 33 minutes, which for me is very good because it's a lot of hills, a lot of climbing, and it was a trail, so it was not on asphalt. It was pure single track trail. It's very fun. Exhausted. I finished, and I can't remember how many it was, but I finished in like spot 20 or something like that.
Nice. But I've never done a trail before, but I've always done flat terrain runs. I'm not a huge runner, but I mean, I've done some in my lifetime. No, but very good, man. I haven't done the trail before. How is it with is it much more difficult? I mean, on your knees and your ankle to do all this?
I think it's No, I think doing trails and doing like being on not an even surface is definitely better. I think that's much better. Like for me, I have this problem when if I'm running for too long, too long, it hurts in my like lower leg. What's that called? Calf? What's that called? Alex, you're the English man here. What's the lower part of the leg called? We're not talking about trading patterns here. We're talking about actual human bodies.
Are you talking about your calf? You talking about your ankle? I don't understand. I don't know. Victor is probably the better one. Your calf.
Yeah, calf. That's the one. That's the one right there. No, so I think it's much better. Shins. Is it shins? I don't know.
Shins, but it's in the frontal side. The calves is the muscle at the posterior side, the back of your leg.
Okay. Yeah, whatever. Alex, how has your weekend been?
My weekend has been really good. I've been honestly, I've got to be honest with everybody. I've been struggling a lot on my funded 5ers account, and I've just had to take a little bit of time away from it. I actually think I've nearly blown it, to be honest. But one door closes, another one opens. I've been smashing it at crypto day trading.
You know what to say?
Honestly,
one man's stop loss is another man's take profit.
Mate, it's literally just been giving me every trade that I've been getting in. It's just been giving me the perfect, just the perfect thing that I want to see. I get into the trade, It holds as support, and it's just super easy. Whereas EU's been kind of tricky. I did get into a trade on another account long actually today, EU, and that's actually about to hit take profit. But on my 5ers account, as soon as I took that withdrawal, something happened, man. Something like, it's the curse. It's the curse. It just...
It is. I think, and this is also important. Like, obviously, Alex is, you've been training for a while. You got this account and everything, and now you start talking about how you might have actually blown it. And this is the reality of trading. I mean, we're gonna have Michael on later in the live stream, and he's gonna talk. He's a professional trader with lots of experience, and he blew account. He's going to talk about how he had troubles getting through the 5ers evaluation, but then now he's funded with $275,000. It's a lot of money, and it just shows that it's what we're doing here is not easy. If it were easy, everyone would be doing it, and everyone would be making money. That's not the reality of this, though.
It's funny with this particular trader. I'll tell you, he will go through obviously his background and everything, but his background is the typical professional background that you look at in financial. And he struggled to start off with going through prop firms and adapting everything that he was doing in the equity market into this whole new world of prop firm and forex trading. And trading funded accounts is difficult. It's not easy. Trading with bigger size and everything is difficult. Trading under, having certain targets that you need to hit, and you've got all of that on the top of your, sitting on your shoulders, thinking that you've got to perform all the time and perform on your. It's tough. It's super tough. And sometimes when you haven't got that, and you're on either demo or you're on your own trading account, and just everything just seems so, you put on a trade, you're not looking at the outcome, and everything just flows so much easier. And that's what happens. Props difficult.
Yeah. It's actually a misconception I think a lot of people have when they come into trading. They think, once you have a profitable system, then it's over. You just hit the markets every day and have instant profit all the time. While that's very far from the truth. You may have a profitable system, but you still have to manage yourself. You have to, and managing yourself, managing your risk has different levels into it, because as you know, when you have your drawdown or any other milestone you may get, the dynamic, the psychological dynamic changes, because you change. You are in a different position than before, so you trade differently, and you have to manage your risk and your psychology in this new situation. So at times you have to learn again a little bit. Okay, how do I go about dealing when I'm on a winning streak? How do I maintain that sharpness in my trading, because it's not the same as it was before. So it's very difficult, I would say, to maintain and to become consistent. It's something that comes and goes away, and it takes a while before you start doing it more often. That's what I would like to say. And blowing accounts is actually, I would say, it's not that rare of a thing at all. It's something
normal.
It's kind of, we shouldn't say it's normal, but it is. It's part of the. It's part of the process. It's you learn by falling and getting back up, falling back, getting back up, until you learn what not to do, and you skip those errors. But there's going to be other errors that you might be doing in the future that you haven't done yet. You haven't learned how to deal with them yet, and that will, it takes time. And I've loaned a lot of accounts, and it's not something to be ashamed of. It's part of, there are lessons. I see them as opportunity, as lessons to become better.
Yeah, definitely. And I mean, when it comes to your personal account, it's obviously not as, I mean, blowing your personal account is obviously, that doesn't happen as often as with a prop firm account, because with a prop firm account you have a specific stop loss level. But with a personal account, I mean, blowing your personal account, you would have to actually lose everything, which to me that means you have a bad risk management strategy going, and you should probably work on that. But blowing prop firm accounts is part of the experience. I mean, I'm sorry to say that, but it's part of the experience. And however, we want to make sure that when you're getting an account with the 5ers, which I hope most of you are, have an evaluation or you're funded or whatever. But if you're, when you buy an account with the 5ers, you go through the evaluation. These live streams right here are made for you to help you go through the evaluations. We want to help you, right? So in the comment section here, we're here to help you. So if you have any questions, any specific troubles that you're having with your current evaluation or your funded account or whatever, ask questions, right? And also go into Discord. We have a Discord server. Go into Discord. You're free to ask any questions in there, especially in the section where we have questions that we're going to bring up in this YouTube. So make sure you take advantage of the experience that you have here.
I think most of the reasons why we blow accounts is mostly our mindset and the tilt that we can go on, especially if we've got a idea in the market and we keep attacking that idea over and over again. And I'm talking about myself specifically, but I know a lot of people have this problem because I speak to a lot of people and I help people with this. But it's very easy to help somebody else and sometimes forget to give your own self that medicine that you are giving to other people. And for you guys to understand that this is totally normal, but sometimes you've got to be the person that you're trying to coach as well. You've got to coach yourself, put yourself in a third person point of view and be like, okay, I've now got to coach myself into being a better trader. And sometimes that can actually help you. And that's what I've done on many times. I've passed loads of prop firm accounts. I've taken many withdrawals from the 5ers and, sold to the light of it. But, I have blown accounts and I have made good money from them as well. And that is part and parcel of it all. But the most important thing is that you're coming back and you're actually improving. Because if you're blowing accounts and getting back in, and blowing accounts and not actually learning what has happened and making sense of getting yourself better, then it's turning into something that is totally not trading. It turns into gambling and you're just wasting money. So there is a fine line and you've got to make sure that you're improving all the time.
We have a comment here from Market Pulse. He says, I am, where did it go? Yeah, right here. It says, he's finding it hard to make profits. He keeps going back and forth, and this is super normal. I think most traders out there, and if I'm going to be honest with you guys, most professional traders out there as well, they're break-even traders a lot of times. Okay, so most professional traders out there, they're break-even, and then they have like 3, maybe 4 months of the year that makes all their profits. So you can say like 80% of your profits comes from like 20% of your trades. And
yep.
this is true, throughout most trading styles, right? So most people out there, you're only one small step from becoming profitable, right? So you're going back and forth, right? So maybe that means you're taking one good winner, and it affects you in a way where you're not capable of executing the trades exactly as you did before. You go on tilt, right? And that tilt brings you back to the break-even point. You have a good trade down to break even. I think for me, what happened was when I started feeling that, all right, I'm actually profitable, things are actually going well. That's when I managed to understand what kept pushing me down, right? And when I identified what that was, which was over trading, I could fix it, right? So I made rules, right? 2 trades a day, max 2 trades a day. Now I'm taking like 2 trades a week, but back then I took, if I wanted to, 20, 30 trades a day, no problem. And there's not even so many trades in the markets, but I'm taking everything that I can find. I'm gonna, guys, like, I have to bring up my screen. You guys remember the trade from last week? Last Wednesday, long on EU. That's the one. Look at that stop loss. Look at that stop loss. That is
wow.
1 pip from my stop loss. So on listen to me, guys. Any other prop firm, you would have been stopped out. On Oanda, gone. gone. I had actually this trade copied over to another prop firm. I'm only long on 5ers right now. I got stopped out on everything. I got stopped out on my personal account, the Wanda. I got stopped out on the other prop firm. The 5ers is the only account that has kept me in profit. Look at USD CHF. I'm in this trade. Look at that. I'm in this trade. Look at that wick. This is insane. I shouldn't be in this trade. This is less than a pip from my stop loss on USD CHF. USD CHF is not like, sure, it's a big pair, but well, actually it's one of the biggest ones. I was gonna say it's a small pair, but it's actually one of the majors. So my bad. But yeah, I'm in USD CHF short from last week, and in the Euro USD long from last week as well. So guys, I mean, last week I closed one trade and I opened two more. Okay, and it's these two. If Euro USD hits TP here for a 4R, that means I'm on the whole month, I'm going to be up around 3R. But I've only taken this month, I believe I've only taken like 4 trades this month, or maybe even
love it
3, you know, but I'm still up, you know, quite a lot if you look at the bigger picture. So there's people out there taking 20 trades a day thinking they're going to make a lot of money, but they're break-even traders, so maybe not even profitable. And I'm taking 3 trades. Look at what.
But you have got a different strategy, though. You are a swing trader compared to an intraday trader.
You know what I spend most of my time this day was spent here. This is where I've developed my edge. So while this trade was making me money, I was checking my phone. I snapped this picture. I was checking my phone. I'm like, yeah, I'm making money, and I'm out here in the middle of nowhere on my bike. That's the life of a swing trader. That's why I love swing trading.
If I could have a picture of the life of a intraday trader, my desk.
Yeah.
Not moving, my desk, non-stop, bad back, bad neck.
Yeah. Yeah, my neck is pretty bad, though, but he's gotta be honest with you, my neck is pretty bad. But
so,
you know,
someone is asking if we can pass, or if one can pass a challenge with swing trading style, and I think it fits in the subject quite well. Yes, you can. The 5ers has.
You can pass. Oh, sorry, I'm not supposed. You're probably gonna say the same thing as I was saying. So go ahead.
No, go ahead. No problem.
No. So the thing with the 5ers is they have one rule, which I believe is like 3 days profitability, which is obvious if you think about it. You need to have that as a business, because otherwise people are just going to go in and go full size and then gamble on accounts. But you can get through an evaluation in actually one good trade if you just take the next 2 days, you know, small lots. But 3 profitable days is all you need to go through an evaluation, and you have unlimited time to do so. So I would say that the 5ers evaluation accounts is perfect for swing traders, especially with the trading the force market like this. It's perfect for swing traders because the spreads are just insanely small. The swap and commissions are fairly small, which means you can just open a position, set and forget, and go about your day. All right, so you probably have a full-time job, right? You wake up in the morning, wake up 1 hour earlier, make your trading plans, set alerts, and when you're at your job, if you have access to your phone, you look at the alerts, you place orders. That's it. It's not supposed to be more complicated than that. Now, of course, trading is. I'm making it
more complicated,
but it is in a sense more complicated because I spend an hour every Sunday evening, you know, making plans and everything like that. But what it really comes down to is the actual trading is not complicated. It's the things that go around outside of trading.
Yeah, that's nicely said.
So. I've got to say, I am an intraday trader. Price is very fractal, and I haven't got a lot of time now to be intraday trading. And I think one of the biggest things as well is I was trying to get into the positions, especially when I was very busy, just to get into the position because I can see the certain signals. And I think maybe taking a little bit more of a step back into a higher time frame to give myself a little bit more time just to go through charts. I actually would love just to take 1 or 2 trades a week, and that's it.
Yeah, and you know what?
Come out and just, I might just pick your brain on swing trading. We all want this, yeah? We want a swing trading workshop.
Yeah, definitely. We can do that. I think it would fit you very, very well because you're quite busy. You're quite busy around the office with the 5ers. I know that, which means you can place a trade, and then if you can work on your patience and not, if you can forget about that trade while being, if you can, because you're busy with other things. Like if you're in the meeting, well, the problem is if you're in the meeting, you can always, open up MetaTrader on the other screen and like micromanage. I've never done that though, but you can if you will.
Yeah.
But so if you can manage to just close it all down, just set and forget, that would be like I did with Euro USD. Imagine how many people would have closed this trade on the way down or on the way up. Like when when you see that stop loss almost getting hit, like I'm gonna get out now instead of seeing that stop loss getting hit. Look at USD CHF. Like I have well, right now I do have quite a lot of conviction in this because it's like a perfect break and retest and a breakout structure in the daily. But looking at this, I have a lot of opportunities to get out of this trade. Like when that stop loss almost get a hit right here, a lot of people would probably have exited on that move up because that move up just looks like stop loss is going to get hit. But I'm using the set and forget, and I'm using a swing trading approach, which means when I'm in this trade, my eyes are on other markets and on other opportunities because the trade is already done. The entry is done, the trade is already done.
Yeah, your job as the trader is done. Your job is to identify the opportunity, hit the trigger when everything is set up. And then your job, according to your trade plan, is not to micromanage. It is not to double doubt yourself. It is to let go and look for another opportunity coming up. And that's the right mindset, I think. And you can only do that when you have confidence in your strategy. And you can only have confidence in your strategy when you have data supporting you that this is how it should work and this is how you should behave as the trader, not doing something else like changing the rules halfway through. No, you have a trade plan which says you get in, you set and forget, and that is everything you need to do. That's when your job as a trader is done.
So this is a good question here. How because obviously we're talking about the overnight spreads when it comes to swing trading, but I don't care about that. I don't care about that. It only becomes a problem if I'm in a position that's not moving for several days. So if I'm in a position that's just hovering around entry and I've been in that trade for 6 days and nothing's happening, then it might become problematic. But the overnight spreads and those fees are not high enough for that to make a difference. If you have 3 or 4 hour winners, then the profits of those trades are going to be much bigger than the fees you are paying. So for me, I've never noticed that even makes a difference. But I mean, you can, in a scenario like this, I mean, it might be problematic. Let's say you enter maybe here or something, and you're still in the trade over here, and you have like it's a huge trade. You're in this trade for like 2 or 3 weeks, then of course it might become problematic. But if I look at my average holding time, which I'm gonna look up while someone answers that question.
So this question, guys, which accounts can you scale up them if you are profitable, high stakes, big? So you can scale through every single account. Depends what your goal is, but I'm sure if you're here, then your goal is to scale up as fast as possible, and that's actually the hypergrowth. The hypergrowth, every time that you scale, you actually double the accounts every time you scale. So it's the fastest way to 1 million. That being said, just because it's the fastest way to 1 million doesn't mean, every time you get a new amount of money, now you have to get comfortable with trading that amount of money. If you scale up too fast, you can put yourself up on tilt very quickly, because as soon as you get trading an 80K account, to then trading 160K, to then like 320, all these big jumps in account size, it can really throw you off your edge. So if you're looking for something that is a little bit slower, a little bit more stable, then definitely the Bootcamp. High stakes is a great account, but there's a lot of leverage on there, and higher leverage is known to be a problem for traders to stay with their risk management. I can tell you that higher leverage is a direct indication to the amount of accounts can get blown as well, because the higher leverage, more people putting on higher volume, going on to tilt, blowing accounts. I would say the Bootcamp, if you are looking for slow, gradual trading, then the Bootcamp is the best. The Bootcamp to me is one of the best accounts. If you are an experienced trader, you've been experienced for been profitable for a number of years, then definitely go for the hyper growth, get as much money as possible, leverage that, put it into your personal account, buy another account, and just make up an ecosystem full of funding accounts alongside your personal account and grow that all together, definitely. But if you are still slowly getting to that profitability mark, then definitely the Bootcamp. Don't even look at the high stakes.
Yeah, so I'm on the hyper growth 100, 160, and I gotta say it's getting to that amount. It's to me it's a quite a decent amount of money, and when you start reaching, when you start reaching higher and higher, it changes your perspective. But I've figured out that the best way of looking at it is you're not supposed to focus on the growth. You're not supposed, well, you are, but you're not supposed to focus on doubling the account, because first of all, you need to make 10%. 10% is quite a lot. Okay, so if you're
especially because the risk you have is different, right? You have only 6% drawdown risk, so it's not the same with high risk. You're actually, it's 1.23 times the drawdown that you're allowed, which is 6%. You need to account for that. It is actually, it's never good to have a P&L goal. You should be focusing on the process, making those R's, and not the P&L.
Yeah, so you need to focus on the process. You need to focus on not losing the account. If you focus on making money, you're not going to be a profitable trader. Like, I know this sounds weird, but you're supposed to be focused on not losing money, keeping capital. Capital preservation is your number one goal and your first priority in trading. If you're too focused on making 10%, well, if you're able to make 10% quickly, you're able to lose 6% even quicker, which means you're gonna lose that account. So slow growth is definitely always the best, because you make a couple of mistakes and the account is gone, and now your opportunity of doubling that account is gone, and it's going to take you so much more longer to get that.
The whole idea of all of this trading is, especially, you want to, a lot of people sometimes say, when you say we're lucky, you start showing them profits, you start saying what do you do for a living and all of this stuff, and then they start to think that you're lucky once they see that you're actually making money from trading. And the more experience you get, it seems the more lucky you get, and the more time you're putting in and the more time you're watching. It's all about preserving your capital until you actually get to a point where you see on the chart your lucky moment. Your lucky moment is the time where you see that there's an opportunity in the market that you can execute on, and you can make a certain amount of money or a certain R. That is the luck, is your experience and you being patient until you get that lucky moment. So capital preservation is the biggest thing at the moment.
It's luck, but of course
lucky. It's not luck. No, of course it's not luck.
So this is, that question is an interesting question, but if you look at it, it's not about the number of trades. It's not about the number of trades. It's about how much you're risking per trade and what your drawdown is, right? So if you're taking 10 trades a day, you're obviously not risking 1% per trade, or probably not even a 0.25% per trade, right? So you're not going to be up 10% in a day. You might be risking like 0.1% or something like that, right? So at the end of the month, you might be in a profit that says like you're in a 3 or 4% profit in the end of the month, which is awesome. And then of course some months you're going to be down, some months you're going to be 1% profit, but you look at traders trading different styles, you see that the actual profits in percentage is not completely off. It's you know, you can have someone who's taking like 200 trades a month and someone taking 5 trades a month, and the profits could be the same. It's just a very different approach to risk management. So let's say, for example, if I would take for example, only like 0.12 trades a month, and I'm up, let's say, 5R or 10R, that would be somewhere between 0.5% and 1.5% or something like that, which you might say like, oh, 1.5% is not a lot, but when it comes to long term, you're going to make those small profits every month, and it's going to add up. And then all of a sudden you have an account where making 1% profit a month is what actually makes you a living. And that's the goal, right? You want to have a big enough account to make sure that you don't need to make, you know, make huge amount of profits, because, you know, it's like leverage. It's a double-edged sword. The more leverage you have, the bigger the chances are that you're gonna blow it.
Yeah, you shouldn't be trying to push the amount of profit you get. That should be just be a result of good execution of your process, and whatever profit comes out of at the end of the month, if you did your job and following the process well, you should just embrace whatever it is. That be a 0.5%, 1%, as long as it is in relation to, you know, that your position sizing is accounting for that fluctuations you have in your equity curve. You know, if the fluctuations are big, then you need to lower your position size, so that, you know, you don't take a lot of risk when it is fluctuating. And if it isn't, and it also depends on what is comfortable for you, but you shouldn't be pushing, like trying harder to get more trades in or more R at the end of the month. You should trade well so that you can have more capital. That's where you should push it, you know, to trade as good that you can add more capital under management. That's where you should be pushing it, not on the strategy level or the execution level, because it shouldn't make a difference what size you have. It shouldn't make a difference if you are, you know, needing that money. It should not make any factor at all for your process. Your process should be the same. And if you focus on that, it will be easier for you when you have more capital under your belt, that you can, you know, keep doing what you have been doing all along, which is, you know, trading the same way, the same process, the same steps, regardless of the P&L, because you haven't been focusing on it from the beginning. And I think that's the best way. One of the things that for example, one of the things I do, my master account never changes risk. So my master account, and I do that purposely, that it always has the same risk, and that is the account that I see. So I see the same risk whether I have more or less capital following that master account, and that's the same. And what I'm trying to do is building in a consistency in terms of execution by having what I see my P&L. I see my P&L, but since it's the same, it doesn't have an effect on me. If the capital that is doubling up, that is following that master account, I still see only the master account. It's only after the session that I check on the other accounts. So but you can, even if you don't do it like I do, you can still focus on the process and not on the P&L, not on the amount that is, you know, you're risking or you're gaining if you hit TP, or you're losing if you hit stop loss. So it is where you put your focus on. And it's good that you do that from the beginning, because perhaps now the amount you're risking isn't that of an impact to you. But once it gets to that level, you should already have a resistance or a way to deal with it, because otherwise it'll be a hurdle for you.
I want to go through
what I'm doing now. We're going through some levels as well. So while we're talking and we're going through that, you guys, if you can see, I'm going through different types of levels, things that I would be looking at. So while we're speaking, if you want me to go through anything specifically, just let it know in the chat. Jonathan will also go through some of his levels. It'll be good, something you can watch while we're all talking as well.
Okay, so my volume, is it low? It's not supposed to be low. I don't think it's very low, is it?
Yours, it's either your volume is really low or mine's really high on my headphones.
Victor, can you hear my voice good?
I can hear you well, but there's a difference in between you two guys.
Okay.
There is a difference. One is higher than the other one. I don't know how mine is, but maybe
whatever. Okay, so it should be let's go into settings, see if I can mic volume. Is it better now?
Yep.
Should be better now.
loud.
Yeah, okay. Loud, so I'm gonna make it okay, better. Right, so I'm just gonna quickly go through some questions that we have here. So again, when it comes to the risk appetite, how many percent per trade should you take? I do recommend that you go to a live webinar that we did on risk management. So if you go, I think that was last week. So go to our YouTube channel, go into the live section, and check the live stream we had last week where Victor breaks down the risk management. So definitely recommend looking at that one. So we have. Which software? Well, first I want to cover this. How do we announce the giveaway winners? So what we're going to do is sometime during this live stream, we're going to give away a link. You're supposed to go into that link, and then based on the number of likes, we're going to give away accounts based on the number of likes, and we will announce the winner sometime closer to the end of the live stream. So I have a question here from Market Pulse again. So as a swing trader, where do you stand on trailing stop and how do you plan for it? So it doesn't matter if you're swing trader, day trader, whatever. If you have tested using a trailing stop and it works for you, then a trailing stop is what you're supposed to be using. So I think when it comes to the different titles that we put on each other here, being a day trader or a swing trader or a scalper or an intraday trader, whatever, that has nothing to do with the way we're trading, doing technical analysis and using trading stops or not. It has nothing to do with that. So what you have to figure out is what system are you trading? Is it profitable to be using a trading stop or not? And the only way to figure this out is to first back test and forward test and journal. Just look at everything. For me, my personal style, am I using a trailing stop? I have, and usually what happens is I get stopped out and then it runs to TP. Like it happens all the time. I have sometimes it works good. Sometimes I look at market structure and I was able to look at whenever we have a new higher low, well, that would be my stop loss point. So if we go to my chart here on your USD here, well, now this would be the new higher low. This is now a swing point, right? That one right there. So I might just put my stop loss here. Am I gonna put my stop loss here? No, because I'm really working on my patience to follow the set and forget idea, which actually a lot of times have now worked out very well for me. I can show you a trade on I think it was Euro NCD. Now I can't remember which one it was, but basically what happened was I had one trade that went like this. It from entry reversed up here right before TP, went down to my entry again, and then hit TP. Okay, and I held it all the way through. I would have closed that trade much earlier than getting out of TP, but the idea of using set and forget actually made me a lot of profits there. So for me, using a trailing stop means when I'm managing my trade, I have a very difficult time understanding if I'm moving my stop loss based on emotional reasons or actual technicals. And I've seen a lot of times it's very difficult for me to distinguish between moving my stop loss based on price action or because I just want to secure the trade to feel better. And once I let go of that and only apply the set and forget, I've been much more balanced and calm as a trader. So for me, it's not only about what works technically, it's also about what works for me from a mental point of view. What am I comfortable doing, comfortable trading? And right now I'm experimenting with many different styles. You guys know that for many years I've been trading the RLZ method, which is a very specific trading system with very specific entry triggers. That one started performing much worse by the end of last year, and I think a lot of that has to do with me living a much more busy lifestyle now with other work outside of trading, if that makes sense. So it's all about finding what works for you and what works for your personality, basically.
There's a question here.
Maybe a break retest continuation idea on pound dollar to get inside that range.
Yeah, I'm watching that as well. The problem is I'm having with that is the fact that the green area that you've got on there,
the resistance.
I feel like
it's big resistance.
Yeah, I can switch quickly over to mine and I'll show you what I have. I basically have this. I want to.
We literally have the same ideas when it comes to trading. It's like, what?
So on the daily, I think this is just, if you look at the daily, it's you have one touch of resistance, second touch, and then the third touch, and that this is just a beautiful level on the daily. So I'm thinking that we have a range here, and this is going to be a range from a trade from like range low up to range EQ.
Yeah, agreed. I'm going to put it out there. I'm going to wait. I think the fact that we've had a deviation of the range on a daily, and we've had price come back in. If it was going to go low, it would have gone lower by now. And it's come back at the bottom of the range, and it looks like it's coming back into the bottom of the range. And normally, when it comes into a range, we go into the opposite side. So
yeah.
Look
at that hit. Look at this level below.
That action.
I mean, that's just crazy. A perfect retest. If you look at the weekly, I mean, look at that. That's just a wick straight down there. Like, that's such a beautiful hit right there. I think this was, remember we had NFP or something. I believe this was NFP, and we have that trade on. Remember EU, when EU broke down, that was this insane breakdown right there. That was crazy, and we actually got in on that. We traded that short live. We traded that whole move live. That was fun. What are we thinking about Euro USD? I mean, to me, it's
I'm long. I think it's a long.
Yeah, I mean, I could almost even bet on it moving higher. I mean, this to me, it's a no-brainer to go long.
Yeah.
Not sure.
I don't see anything else. I think that the area you highlighted, that's the next structure on the daily time frame, and the opposite direction, and there's nothing in between. If you look to the left, there's only imbalances. There's just one big handle and no structures. So to me, it's going to go up. I just don't know yet if it's going to go straight up or at levels and steps, but it's going to go up most likely.
So for those wondering about
it looks like it's going straight up. It's not saying anything else at the moment.
But the thing is, it is going straight up. But what if the daily candle is what if this 1 hour candle is going to close bearishly? It's different though, right? But I would still say
I don't
it's
think
bullish.
we got no catalyst to bring that price down. It's like that, I wouldn't be surprised if, we look on the daily, you have a big push up, you have a little retest, so you got quite a big body on the daily with a small wick, and that is the small little range where you would continue the daily closes, and then the candle continues to that level where you've put out there, and there you would see on the daily that kind of price structure. So I think I think we've had quite a lot of dollars being strong. I wouldn't be surprised to have a little bit of cool off as well.
Yeah. And yeah, and also tomorrow we have, I believe we have CPI tomorrow. We have something for the EU. Yeah, so we have the economic sentiment in it. This is a major one. And then we have PPI. That's PPI and CPI. Is that the same? So PPI. So 14th. Then we have Fed Powell speech as well. So yeah, we got major
That's
news
going to be
tomorrow.
interesting.
Yeah. For those wondering, I had some questions about my average hold time. So my average hold time throughout this way of trading is 2 days average hold time.
Wow.
Yeah.
Someone is asking if you're taking
an hour.
partials.
Yeah. Do I take the do I no, never. Like I entered the trade, I put stop loss, I put TP, and I let it run. You know, as soon as I think this goes for a lot of people. Like as soon as I do start managing the trade, if I move my stop loss, if I exit 50% or do anything like that, it's very rarely because it's technically a good idea. It's almost always because there's something that I want to, like, I feel fear of something and I want to secure the trade. Like it's always like based on a stressful feeling. And I've managed to identify that, which means I'm not trading the system anymore. As soon as I enter the trade, all I have to do is just, take a step back. And yeah, I try not to manage my trades, basically.
I like pound Swiss long, actually. What do you think on pound Swiss long? Obviously, it's got a little bit, if we're looking at the daily first.
Yeah, I think we already had that break to the downside. So the idea, I remember we looked at this on the live stream as well. The idea was basically to short the breakdown. We had that move down. We bounced here, hit resistance, and now we're probably hovering around the 50% fib on the daily. I think to me, let's go on the weekly here. To me, it's yeah. To me, I would much rather go long down in this area. No, I think we're a bit too high, However, we have one which I like, and that is Euro. Which one is it? Is it maybe CAD CHF? I think we're in a possible. Well, that's an old trade.
I don't have CAD on here. I'll pass it over to you.
Let's see, where's the trades? And one thing, guys, you can see on the right here, I have a folder in Trading View called Trades, and this is where I put all my trades set up, so I can just hide them. And then when it's time to go into the journal review, I can just activate all the trades. So all the levels that has to do with that trade gets activated. I think CAD CHF is in a range, and we're at range lows right now. To me, this looks like a possible long, but there's no price action. Is just quite messy on the 4 hour. There's just nothing clear, so I'm just gonna let this one go. I need to make. I'm gonna take a trade. It's gonna be clear.
Nice.
Blip is asking us, how do we manage our trade? How do we go about managing trades, Alex? You and I.
My best trades are just set and forget. My best trades. Every trade that I seem to lose on is because I've mismanaged by adding a little bit too heavy and then bringing in my stop. So the risk is the same, but I've got more on. So I'm actually getting more risk. I'm actually a bigger trade position. Making the stop smaller. The trade management's all off. That's when I lose most of my trades. The best thing for me, set and forget, and I got a nice win rate on that.
Yeah. In my case,
I'm just gonna take a 2-minute break. I'll be back.
All right, no problem. In my case, I would say I would like to do set and forget all the time, but I don't do that. I do have some intervention that I do into it, but it's basically when there's like high impact news, like I take a trade and I trade the session, but of course I want to be. I want to capture the move of the session. Sometimes that move doesn't come along, and there's high impact news coming up, and I need to make a decision. Do I want that risk with that high impact news with my trade on? And usually those are the moments that I put it away. I put it off the trade. I take it away because when I enter the trade, the risk that I planned was not taking into account that I will be taking this through high impact news, and with slippage, with high volatility, it's a different setting. So that's the only time that I would take it off. And another is if it's very close to my TP. Let's say like 90, above 90% my TP, 95. Sometimes I tend to close it right before if I see something that is but that really helps. Actually, set and forget is much better. But let's say that I see it rejects right before my TP and starts forming bearish. Let's say I'm a long and it starts forming bearish order flow, but very strongly, not just break a little structure, but start forming outside bars. And those times that I accept that perhaps my TP placement wasn't adequate, right? But usually the best thing is to just set and forget. I notice when I do micromanagement, when I start thinking, when it's only like 20% going to my TP, and I start thinking, no, this is not doing what I expected. Those are the times that I typically give away the profits. That's not the way, according to my results, the way to trade. The way to trade is just get in, identifying the structures well, and let the market do its job, hitting your TP or not. So yeah, I would say I wouldn't do. I'm as close as possible with set and forget, but I don't always do it. I still, with high impact news, I take the trades off sometimes, not always, depending on the distance to the my stop loss. There was someone else who also asked, who was it? Something, I think it was this. Let me see. There was a comment. This comment, Stephen, saying trailing stops is a sign of fear. Good strategies ignore trails. I will say I don't agree.
It depends on the strategy. Yeah, it depends on the strategy. Really does depend on the strategy.
Yeah, I don't agree.
I know good traders that they're adding to positions and they trail their stop until the trend ends. They've got an intraday trend. They're trailing to the next, higher low, higher low, higher low, higher low. Suddenly they get a double top and it comes down and it takes them out, and they've made much more than if they had a straight 1 to 2 risk to reward. So I don't really agree on that one.
Yeah, me neither. I think whether or not trailing stops is good for you depends on the strategy, and you will find that out in your data. Try doing backtesting with and another run without those trailing, and see which gives you better results. There is your answer, and you will see that in some strategies, trailing stops could be a good thing. And if the data is telling you that it is increasing your profit, then by no means it's bad. And I understand where it comes from, that you're psychologically you don't want to lose, and that's why you trail. But that is not the only reason people trail. People also trail because simply it's more profitable, not only because of their emotions. I want to show actually the dollar index, because I think that is, let me show you. There you go. Yeah. If we look at the weekly, what do we see? We had market making this swing high, coming very close, and actually coming to the monthly structure. And as soon as market within these 3 months, but on the it's only 3 candles, when it got to this supply zone, what did it do? It formed an outside bar. That's a very strong signal of rejection. And from that moment on, remember, this is the dollar index. So if this is going down, that's going to be bullish for euro, dollar, and pound dollar, of course. So if we go to the daily, what do we see there? we see bearish structures on the daily being formed, right? Actually, I didn't go to the weekly, but no, this was the weekly. I'm sorry, it wasn't the monthly, it was the weekly. And you saw this is the order, the structure, the bearish structure was formed on the weekly after it had interacted with the monthly structure. And it's very clear to me that this rejection, this outside bar, is it reacting to that monthly order block. So if we go to the daily, what do we see? The market came into that supply zone, right? It starts forming. I don't have it here because I took it off already, but it formed the first order block, right, on the daily time frame. I took it off already because it's not the most relevant. This one you could take off as well. And it started forming all those structures, those bearish structures. And the market made a strong move to the downside, right? And pushed back. This is the retracement, comes back to that order block on the daily and forms another one. That's, to me, is very clear price action telling us, the market is bearish and it's going to continue until it changes order flow. And it hasn't done that yet. And if you look to the left, we don't have any structures here on the daily to stop price. So that tells us that euro dollar and pound dollar and all those pairs that have dollars in them, that you can be, my expectation is you can be bullish based on this. You can be bullish on euro dollar. Right? If you turn it around, you'll see that there's nothing to the left. We are in a supply zone. Yes, we are. But this is a supply zone on the 4 hourly, actually. This is, on the weekly. Let me see it. There is a supply zone here. But based on the dollar index, we can expect much higher prices in the coming sessions. So that is something that I keep into account. And this is what I was referring to. If you look to the left, there is nothing with this big handle, nothing stopping price. There's the next structure on the bearish side is this, which is we have a lot of movement, a lot of space for price to still continue to go up. And it's most likely that's that's the easier way for price to continue. So let's see how it goes. Probably going to be retesting that high from last week, from 10 days ago. Let's see how that continues to go.
Yeah. Hoping that it's going to break out and continue to my TP. I think it looks pretty good. I think I have to adjust some. My TP is 83.57.
83.57. Okay. That's actually in this area. Yep. I understand that. Yeah. That makes a lot of sense. Yeah,
I can show you
if I were long, that would be the area I will be targeting. Yes, because to me, if it breaks this, it's probably gonna continue to. It's already into that. You see, actually, if we go to the lower time frames, we can see like before. This is the H4. We can see that after it had this spike, it has started making lower lows and lower highs until right now, because right now in this candle it broke this high, this last high, and it's now making a higher high. And we already had this is the last high we had. Let me mark this like this. That's the last high we have, and now we're making a higher high, and we already had a higher low. So now we switched again from this bullish structure we had before. This is then the retracement, and now we are in a bullish trend again. So long should be we should be looking for longs based on this market structure. Right?
Yeah. Okay, so let's see. Do we have? I have to check the news calendar today. Do we have anything interesting going on? So we have. Is it the 13th? Okay, the 13th.
Nothing on news today.
Yeah, we don't have anything.
We have two we got FOMC members speaking. That's I mean, sometimes it's they're gonna say something completely unexpected and make the market move, but usually nothing huge unless it's Powell.
When's wow, Euro's really going for it.
It is.
When is Michael coming on?
Michael is coming on, which should be coming on now. He's I think he's live on another show, so he's supposed to be ending that show.
He's live
now.
on 2 shows. What?
I got a famous celebrity here.
Busy man.
Yeah. Now he's. I think he's like a consultant for a pretty big trading.
Trade view, I think it is, or trade ideas. Sorry.
No, it's like a trade TV. It's a pretty big
we'll
YouTube. Yeah. No, so that this guy, like, it's gonna be interesting when it gets on, because this is a real pro. Been around for many years. He's also a CMT charter holder, which is interesting. Not sure if everyone watching here is familiar with the CMT. That's the Chartered Market Technician course, and
Just
we have him.
Look at this crazy price action on Pepe, for God's sake.
Pepe. Okay, so Michael, we're not gonna talk about Pepe.
We're not gonna go
to
talk about
Pepe.
I can see that.
Yeah, we want to be strictly professional here and not talk about.
If you look at the price action of Pepe, you laugh, but it is the gift that keeps on giving. It is the best.
Guys, we have Michael in the background. I'm gonna add him right now. I am super happy to have him on. Please give him your biggest welcome in the chat. Welcome, Michael. How are you doing?
How's it going? We can talk about Pepe if you want. I haven't done. I don't know if that's serious CMT stuff, but it works. If it's a chart, we can look at it. How are things?
Well, I we don't have to talk about Pepe, but it is just the way that it holds levels. It is super directional, and you can't. It just runs. And if you like trading equities and you like things that run, all you need to do is just get on the right level and then just sit back and relax.
Well, to be fair, I did just take a look at Pepe, and I must say it's not a berry short. Okay, it's not. I wouldn't say. I mean, I'm seeing quite a few higher highs and higher lows here on the higher time frames. I would definitely say it's pretty high. But all right, let's not talk about crypto. Let's not talk about Pepe. I want to talk about Michael. For those of you who have not watched the interview with Michael, so Alex did an interview with Michael. It's in our YouTube channel. I highly recommend you go check it out. But for those of you who have not seen it, Michael, maybe you could do a quick introduction. Tell us a little bit about yourself. How long have you been trading, and what type of trader are you?
Sure, yeah, I'll give the high level version for the people who've already seen it. But essentially, I've been trading. You can see a lot of, again, gray in my beard here. I've been trading since 2006. I started when I was actually in university. I was trading prop at the time, which was a dedicated floor that you went to. And they basically scalped equities at the time. Before HFT trading, before all of that, we were the HFT traders. I did that for a number of years. That was a good time. Then that company just ceased to exist once the electronics came along and kind of pushed them out of the market. I worked in hedge funds then for about 10 years, where I worked with a hedge fund administrator. So we did accounting and legal and all of that stuff. But my role was to go into the hedge fund and figure out exactly what they did. And if they had any weird securities, try to figure out how to price them, that kind of thing. But just to make sure, this was Bernie Madoff time. So everybody was worried about everyone, especially with hedge funds. So they wanted an independent party to come in and make sure they were doing things that were legitimate. I did that for a number of years before that company got bought out. The whole time I was trading. I was working with Trade Ideas, which I work with now. But the whole time I was trading, just you know, when the boss wasn't looking, right? Minimize the screen, take a couple trades here or there, that type of thing. And then fast forward, when that one got bought out, I started to more officially work with Trade Ideas, which I know is a partner of Trade the Pool, which is a partner or a subsidiary of the 5ers. So we got that relationship there. And then just been trading the whole time. So then I kind of dipped my toe back into the prop world when there was this big kind of shakeup, I think a year or so ago, when all of the prop firms just instantly went, there was no time limit anymore. That kind of that perked my interest. I really wasn't too interested in it too much, but I had spoken a lot to Michael, the CEO of Trade the Pool, with the relationship we have with Trade Ideas, and I was chatting with him about it, and it seemed interesting. So yeah, so I ended up getting involved with that, and I'm a swing trader, right? So I'm a CMT. You can see by my name, a chartered market technician, which is just a a certification for technical analysis. And yeah, I use that to help me with different concepts and ideas. But yeah, I primarily swing trade. I'm just not very good at the day trading side of things. So it's the high level of me.
Awesome. And I'm very interested in the I see that you have CMT in the title right here. No, right. You know
yes,
what? I'm
it
gonna
is.
let
Yes,
you.
it is. Yes.
Okay, so CMT, please, has nothing to do with ICT. It's not a trading concept. It's not created by some guru. It's an actual.
Don't say that.
Yeah.
He's done a lot of good for the industry of retail traders. You can't go there.
It's a very respectable organization that gives out a certificate to people that have gone through I think it's 3-year-long process of basically learning everything there is about technical analysis. If you see someone with CMT in their name, you could be 100% certain that they know everything there is to know about the fundamentals and the advanced stuff about technical analysis. I've actually started doing the CMT1, a couple of some. Hopefully, I will be also be adding CMT
thick
to my
books,
name
no?
in very thick books, and
very
they're quite expensive.
Books.
But I guess it goes to the course.
Yeah.
Not the. I think I paid $250 for my book or something like that. With the courses and everything.
Highly recommend, just if you haven't already, highly recommend checking out the Optuma courses.
I did actually check that one out. It's very good, and I'm definitely one of those people that I learn from watching videos, not as much as reading. So those courses are really, really good. And for those of you watching, if you really want to take your technical analysis to the next level and not look at all these gurus on YouTube selling this and selling that, if you want to go to the source and really talk about what technical analysis is and what it's not, check out CMT. It's that you get really value from that, and very interesting.
Yeah, if you're looking to get into the like, if you're looking to trade, right, I would probably just say take a psychology course. It's probably going to be the best bang.
Yeah.
But if you're looking to get into the industry at all, or do anything, that it puts a lot of reputability behind the name, because again, it's 3 years long, and then you have to get vouched for by other CMTs. So you either have to know them, or you have to write essays that they can read. It is the way I put it is, a lot of people have heard of the CFA, right? That studies the fundamental side of the business. So, it's cash flow and accounting and all that stuff. And then the CMT, we focus on the technical side of things. There's a lot of quantitative trading. I really liked it. I actually took it, as I mentioned, I've been trading since 2006. So I had been looking at charts for nearly 20 years before I took my CMT. But what I loved about it is, A, there's, the reputation behind the name, but B, it makes you learn. There's so many different aspects of technical analysis, not just candlestick charts and this ICT guy, which, we could talk about whatever.
It is what it is with ICT.
There's lots of different, so like things like a point and figure chart, I never looked at in my life, but it was really interesting. Actually, part of my trading style that I use with you guys at the 5ers, with the commitment to trader data, I learned about that in the CMT. So it makes you, even if you are, you consider yourself a technician already, it makes you learn a bunch of different stuff, some of which you may like, some of which you may not, and some of which you can kind of pull in as well. So there's my pitch for CMT. Tyler, if you're seeing this, he's the COO of the CMT. He's a good friend of mine. That's your guys' pitch.
Nice. Well, no, and also, you know, when I went through the CMT one, it's just I love how you look at technical analysis as an art form, you know, and it's just you can look at, you know, the way that I put it when you read it, and it says our job is basically to identify a trend and then see how can we get in that trend, and how can we stay in the trend for as long as possible while managing the risk, you know, accordingly. And the concepts are so simple, and finding trending markets, like the underlying idea of the fundamentals of technical analysis is actually quite simple. When you understand that, you realize that trading has actually more to do with, like you said, psychology, because the technical things, there's only so much you can do and say about TA. But when it comes to trading and the problems that, you know, I know that we all are having on here and everyone watching is this psychological things that kind of makes the biggest problem. So I think you said that you're a swing trader. Now, are you a swing trader because you just feel like it's nice to be a swing trader, or do you have? would you say that you're? Does it have more to do with your personality? I mean, are you a swing trader because that's the way you are as a person, or you know?
Yeah, it's a couple things. So one, again, I always recommend Daniel Kahneman's book, Think Fast and Slow. I think that's a great one. It
very good.
Teaches you about how your mind works. So my brain just works as a swing trader. I want to be able to sit back and take my time in a calm environment, and then come up with my plan and place my orders and walk away. That just works best for me. The other thing is I trade Forex and crypto and some metals with you guys, and I swing trade equities, and I trade anything that I can get my hands on. I do different trading styles and models and all of this for. So some of it's just time constraints, right? I always say you shouldn't day trade unless you can like shut everything out and laser focused for the period of time, and you're not thinking or looking at anything else. I don't have that time, right? Father of two, I consult with trade ideas. I have my own YouTube channel and everything that I do. And then I've got all of these. So for me, it's partly time. But it's mainly what you mentioned, where it's my psychology. I've tried to day trade, I don't hide this at all. I failed a whole bunch of 5ers accounts, trying different styles until I kind of got a little bit of my groove. And a lot of that was trying to do what I did on long-term charts, on short-term charts, and things like that. So, and then a lot of the other failures were trying to take what I learned and what I do in equities, which I've been profitable in for a very long time, and then apply that to Forex and realizing it doesn't work there. So like anything, you learn your style, you learn about yourself through failures and getting up and trying again and that kind of thing.
So that's very interesting. And I think you mentioned something here that we talked about before you coming on, and we talked about the fact that blowing accounts. So like you said, you tried day trading and it didn't work out great, and you blew a couple of the 5ers account, I assume, evaluations. And we talked about how it's actually quite normal, you know, and one shouldn't be ashamed of not going through an evaluation, because you know, trading is very difficult and people do blue accounts. And here we have someone who's been trading for many years. He's a real, you're a real professional, and you just come on here and say, yeah, I blew several accounts. So if you're watching this, as our audience, you remember that if you blew an account, that doesn't mean the end. You know, it just means that you just got to get back up and keep going and keep pushing and be resilient and understand what happened and try to learn from those mistakes and
that's the big thing. I want to hit on that, the learning from your mistakes, right? I never felt bad blowing an account when that account I tried a specific style on, and I was doing things that I was recording and it didn't work and the account blew up. You know, if I then opened another account and did the exact same thing again, then I would be mad, right? It was okay. Let me try, swing trading on the daily chart the way I do with equities. and that didn't work, and the account blew up. Like, okay, that's fine. And then, you know, trying different styles, as long as you're recording what you're doing, you know what's going wrong, and you're trying different things, then yeah, I think it's absolutely
one of the biggest things that I see with traders is they have a trading strategy that is not congruent in their personalities. Like you said, they're very impulsive people. They don't like waiting. You know, if they go to the shopping mall and they're waiting in the queue, they're like huffing and puffing because they just want to pay. And why are they swing traders? You know, yeah. So those types of things with matching your trading style to your personality is probably the first step, but one step that can change the whole trajectory of your trading. We had one guy that I did an interview with that he was trying to swing trade and it wasn't working, blew loads of accounts. Then he went to start trading gold. And when he started trading gold, but he started having on a smaller time frame, actually a negative risk to reward ratio, only going for 10 points, and actually willing to lose 30 points, but he had a win rate of 90% because all he wanted was that one little push. He was then suddenly profitable, and he was actually withdrawing a lot of money from his account. So it is about testing, understanding yourself, and trying not to do things because other people are doing them. That is the biggest journey, I think, with trading, which some people miss, unfortunately.
Yeah. And that's the science, right? You know, you mentioned that technical analysis is an art. You throw the same chart to 5 people, they're going to see 5 different things. But the science of it, and what we got to focus on is, are you taking the data in? Are you recording that data? Are you saying, okay, this worked, this didn't? Is that all of, you know, as opposed to most people come in, I find, with trading. I've mentored a lot of traders. I've been in the industry for a long time, and most traders that fail, they're not doing that. They don't have a plan to start with, so they don't know what to tweak, and then B, they're not tweaking that plan. They're just pushing on it. They saw a guru online, they saw, you know, a YouTube video that said this indicator is great, whatever, and they just kind of keep banging their head against that wall, as opposed to taking the data and then pushing from there. Because I'm one that I believe, hey, I've not figured anything out. I have a style that has been working for me, but it's really about kind of becoming a master of something. I don't care if it's RSI or moving average or, you know, anchored VWAP I use a lot, things like this. Whatever it is, you have to hone in and focus on that, and then record the data and say, this is when it works, this is when it doesn't work, and kind of go from there. I think is huge. So, you know, there's the art side, and then that's the science side of it.
Would you say, Michael, that the process that you just described is more important than the actual strategy that you're using? Would you say that?
Yes, I think I have a video on my channel. I took a follower who I said, I want to take a random strategy, and so give me a strategy. And I think they choose a moving average crossover. It was like an 8 EMA, 20 EMA moving crossover. I said, I'm going to trade this. And I think this is one of the accounts, either with you guys or another one. So I'm going to trade this, and I'm going to pass an account, and I'm going to take some money from it just because it's random. I really think that you could grab a random strategy from anywhere, and if you really study when it works and when it doesn't, and what you're looking for and what you're not, and you have your risk reward sorted out, I think you could take anything. This comes from someone, I'm a bit of, when it comes to the equity side of things, I'm a quant. So I do a lot of back testing and models and things like that. So I've tested thousands or even more scenarios. And at the end of the day, right, it comes down to risk management, you know, knowing what it is that you're looking for, and then becoming the master of it. I really do think that.
When you go, have you got a specific process then when you're looking to find an edge? What is your process? Say you've got a specific structure of a trade or way of trading. How do you then take that information? Have you got a process of taking that information, and what is that process to then turn something from nothing into a potential edge?
I think the first step to that is you have to find, there's nothing new under the sun with trading. You know, the creator of Japanese candlesticks was a samurai in the 1800s, right? And then from there, 1700s. I don't know, I'm not good at history, but anyway, trading's been around a long time. There's really nothing new right under the sun there at all. So the idea is you pick something that you believe works, and then it's just iteration of taking trades, recording those trades, seeing what worked, seeing what didn't. So for myself in this journey of Forex, again, I came from the equity side of things where things trend. Your goal is to get in something and to ride that trend as long as you can and then get out. So I tried to apply that same thing to Forex, and I blew up a lot of accounts doing it. So then the idea was, okay, I need to find something that's a little bit more revision to the mean in a way. And then it's, where do you get that idea from? I'm sorry, it's just, there is no one guru. It's a lot of hard work. A lot of my stuff came from a gentleman, Jason Shapiro, who's a market wizard. And I read about him in one of the Market Wizards books. And when I was thinking of revision to the mean systems, he's one of the first thing that came to mind. And then from there, it's just testing, iterating, right? Finding what works for you, and over again.
Yeah, I must admit that's I can relate to that. I love trading to the mean when it comes to Forex. That's my day, and that's my bread and butter. So I can understand that. Definitely when it comes to trading crypto, I'm the opposite. I want to get in on the trend, and I want to add to a trend, and I want to get out when I feel that the trend is done. So definitely resonate to everything that you've said.
Would you say, Michael, that if because I mean there's many different ways of trading, but we know that there's some fundamental ideas in technical analysis, that is, you have trends, you have ranges. What would you say is the easiest thing to recognize when it comes to technical analysis? And for someone you're starting out, would you say that maybe they should be looking for trending markets with using horizontal levels, or is there any technical approach or tool or idea that you think would fit as something where you want to start out with if you're completely new?
Yeah, it's well, if you look at my charts, I have them up here, but if you look at my charts, they're bare.
Well, we can actually move into your
pull up a chart.
Yeah,
I'll grab this. So right, my charts are, I think I did that right. My charts are incredibly bare. They're just there's no, that's it, right? There's no Fibonacci, this, that, the other thing. There's none of that. I don't.
So you're always using bars, not candles?
Yeah, for me, I show candle. If you look at my Twitter, I'll probably post a lot of candles because people recognize those. Bar charts give you the same thing. I like simple colors. I just want to know the trends. And you're right. At the end of the day, again, no indicators on here. I don't feel the need that there's anything special behind them. There's no, crazy fancy lettering. And then after that, it's just, like you mentioned, trend and support and resistance. I think those are the two main tenets of technical analysis, is that what's the market doing, and then what's kind of the support resistance that happens around there, and just keeping it incredibly simple, right? My mentor always told me, you draw your support resistance lines with a crayon and not a pencil, right? So you just make them thick. You see, this is the area in which this has rejected before. This is the area in which this is supported before, and then what the trend is. Another mentor of mine and a close friend now, Brian Shannon, who's kind of popularized the anchored VWAP, that is a tool that I use a lot as well. But that's about it when it comes to the analysis of the chart. Now, for me, if we just want to talk about my strategy when it comes to swing trading Forex, we can get into that. But when it comes to just charting, just trend, where were struggles happening before, where were buyers and sellers, and what's the trend of the market. That's right. Simpler is always better. I've never met, and again, as someone who sat next to tons of hedge fund managers and spoke to them, there was not one who had like I've hacked the system, it's this and this and this indicator and blah, blah. It was just trying to figure out what's going to be moving soon, and what the trend of something could be. Sorry, I keep looking up, but I'm in a,
what I find is very interesting is the more experience you have in trading, it seems the more simple your approach is to trading. And I think this is universal truth. And I think you guys watching this remember this. If you're following someone specific on YouTube and they're promising you an insane trading system, you just have to follow these 690,000 steps before taking a trade. Probably be careful with that, right? Because here we have Michael and every single one of us, Victor, me, and Alex, we all have simple approaches, to trading. Just as Michael, I look at trends, horizontal levels. That's everything I need, and that's all the information I need is in the candles. So think about that when we bring these guests on. It's the more experience they have, the more simpler their approach is most of the time.
I think you could.
Sorry, just another great book when we're talking about that and talking about simplicity is, I think it's Tom Hogarth, I think is the writer's name. Best Loser Wins.
Exactly, that's a great book.
It just shows that it's one of those things that as a trader you know everything in the book, but he just hammers it home to you. And the idea, you can just summarize the book, is that there's no system in the world that you're right 100% of the time ever. So the difference is can you pull the plug when you're wrong? And the best loser, the one who takes the losses the best over the long run, that makes money. If you look at my equity curves, it's a lot of small hits over and over and over again until I finally nail something with the commitment trader data and things like that. And then I generally, hopefully, swing a really big one. And my goal is just to stay alive while I'm getting hit until I get the position correctly. Right?
This is a great comment right here from Steven.
Yeah.
I think if you cannot explain your trading system to a 12-year-old, it's too complicated. And actually,
I love that.
It's funny, but it's so true, so very true.
Yeah, I love that.
I try to explain my trading to my son. I'm trying to teach him trading, and I try to explain it as if I'm I have a bouncing ball, right? And I'm standing at I'm looking at a flight of stairs, and I'm taking that ball and I'm bouncing it. And for at that ball is priced, and it's bouncing on every every step of that stair. And on every bounce, you're supposed to be buying, because price is bouncing on in that trend, and trying to get that idea of finding a trending market. And I feel like it's that's how we should try to view TA, really.
Yeah, it's quite as well to keep, if you're teaching your son, you want to keep it quite fun as well. But just something like so simple idea like that can kind of gets into the minds of even people our age as well. They're trying to understand how price works and things like that. But you can literally make the crazy amounts of money with just understanding market structure and levels. That's it. And I think with everything that is getting plastered around the internet, it's difficult to get rid of all of that stuff and really just hone in on what the actual works. And that is, again, levels and market structure. And the rest of it is execution. And execution is one of the hardest things, in my opinion.
Yeah.
Because sometimes if you're the one that's executing, it's you don't know if you're having a good day, a bad day. You've got to be managing your emotions, and that's the hardest thing in trading.
It's really trading. Trading is the antithesis to a lot of things. Personally, I think this is the problem that a lot of people have. First of all, if you say you want to get in shape, right? You go to the gym and you work really, really hard for a really long period of time. And the harder you work, the better shape you'll be in, right? The heavier things that you lift, the bigger your muscles, right? It's the more effort you put in, the more you get out. In trading, it's not like that, right? I can't make the chart do anything. And there's no more effort that I can put in. That's why I quote all these books. I spend a lot of time away from the charts reading it, right? So that's one thing. And then the other thing is that, and just to use the gym analogy as well, you'll notice if you spend any time at the gym, a lot of people overcomplicating the hell out of that. They're saying you can only eat this much protein at a time, and you have to work out in this particular way. And then you look at the guys who are in really good shape. They go in, they do your basic lifts, and then they leave. And I look at trading kind of the same way, is that people to strive to get better and better results and to get a higher win rate end up going down crazy rabbit holes and doing crazy things. I think one of the advantages that I had is when I looked at these hedge funds, there were some systematic trend following hedge funds that managed billions under management. Their win rate was 35%, right? It was just when they hit big. And I would talk to them. I say, hey, you ever attempt to get that win rate up? And they go, no. Right? It's just, it's not, this is the model. This is the system. He said I could hire another million quants and we could work thousands of hours and we could spend tons of money. And yeah, maybe we could get from 35 to like 38% win rate, or, you know, and it's trying to fight too much on the margins, which is things that you can do in normal life. I don't think work in trading. I think there has to be a certain kind of Zen aspect of, this is my style, this is my strategy, and then, you know, this is what I look to do. And the more kind of laid back you are about that, I think the better.
Yeah, dude, like
good
that
idea
is
that the turtle traders. That's what the turtle traders, the way that they were trading. That's
we
they
had
a
insane
really
story,
small win rate. Yeah, really small win rate. But
you know,
when they got into the trades, they made all their money back.
Yep.
You mentioned something about, you know, the Zen aspect, and I feel like it's so very important to understand, because, you know, when I'm trading at my very best, I'm not really trading, you know, like when I feel like when I'm in a bad drawdown, I'm just trading all the time. I'm trading too much. I'm taking too many trades, and I'm taking many trades that I'm not supposed to be trading. When I'm trading at my very best, I'm looking at the markets on a Sunday. I'm placing one order on the Monday. Then on Tuesday, I'm out on my mountain bike in the woods. That's when I get the best results, and the market is just running in the background and my orders in the market. It's like, if you try to push it, if you try to become, like if you try to push it, you're probably going to see that, if you're forcing an outcome, the market is just going to, it's going to fall, going to beat you up, basically.
Another analogy for people who aren't kind of gym rats, but that I always like, is an archer or a hunter or something, right? But with an archer, you spend all of your effort on drawing and aiming the bow and doing all those things, and then as soon as you let go, it's the arrow is going to go where the arrow is going to go, right? And it's the same, should be, in my opinion, the same with trading, where all of your work should be on prep and review and understanding your levels and doing your things. At the end of the day, trading is just hitting the button. So until you can get to the point where all of the work is already done and you're just sitting there and hitting the button when the button needs to be hit, I think you're thinking too much, right? And an old trading mentor of mine who was a military guy, he always said, you don't get smarter when the bullets start flying. And his idea is, his message there was, you have to have the plan before the money's at risk, because as soon as the money's at risk, that's when the bullets are flying. That's when your emotions are heightened. That's when you're going to do dumb stuff. So, you know, just, you know, sort it out then, to have it all sorted, ready to go, and then just hit the button and let it work, right? That's why we have automated orders.
You mentioned in the interview, you talked about handling drawdowns, and you basically said, like, walk away. And I remember watching the interview, and I said, like, oh, that's a fancy Zoom background he has there, but that's actually your place. So you're like, you pointed out, I live in the woods, I take a walk, and I can really relate to that. You know, like, you're having you're in a drawdown, and you feel like, you know, the best thing to do is because most likely you came to that drawdown, you created that drawdown because of mental errors, right? So what you have to do is kind of like take a step back and work on that, right? Get that balance back. Is that something you do actively?
Yes, whether it's a drawdown or whether it's I'm doing too well, right? And I think that second part is one that came a lot with the trading age. There was always a time where you would trade and everything was hitting, and you'd have that moment where you're like, I feel like I'm unstoppable. And I've started to, my trading actually got a lot better when I started to identify those moments and leave and go for a walk and just move to cash, just sell it all, go to cash. You know, right? I can get back into the positions if I really like them, but it's just time to go somewhere and remind myself that you're playing a probabilistic game. You're trying to put the probabilities in your favor. You haven't figured it out. There's no guru. There's no guy who's figured out the market. So I think it's when the emotions get too crazy in either direction, when you're either doing too poorly or when you're doing too well. And I think that doing too well part is harder for a lot of people, where they start to, really start to see kind of the money signs, where it's just, you got to let the trade play out, whether it's good or whether it's bad, and take breaks. If you hit an amazing, so say I'm not a day trader, but say you're a day trader and you make money every day in a week, right? Spend the weekend like reminding yourself, I haven't figured it out. I will not go into next week, and I most likely won't win every day. And if I do, then I really need to sit down with myself and say, okay, there's a loss streak coming, because that's just the mathematics of probabilities. And that, again, the pulling myself back, it's easy to, I think, pull yourself back easier when you're in a drawdown, because you get depressed and you get down. I think it's harder to pull yourself back when you're really doing well, because you're on fire and you're feeling really, really good about it. So for me, that's the more important part, for me to go in the woods with my dogs and, go far enough away that the cell phones don't connect, and just hang out for a bit.
Yeah, I like to call that exact thing the trader's thermostat. It's like you've got this thermostat that you're regulating. You go at the top when you're doing the best, and it's a range that you're making loads of money, and then suddenly you've got to the top of your range, and now you're making all the mistakes. You're over leveraging, and your trading thermostat has got to bring you back down to where you're, to the opposite side. And then when you're at the bottom and you're losing and you've got loads of drawdown, and that's suddenly where you're pulling all of your risk management in tight. You're making sure that you're planning your trades and you're being on point with everything, and it just regulates up and down and up and down. And the whole game in trading is, how can you identify when you are at that top of that range? How do you get to the next range, and how do you make sure that you're not going to go the opposite direction? Because a lot of traders that I've seen, and I saw it on the early days in myself, I would have fantastic days up until Friday, and then I'm feeling absolutely amazing. There I'm doubling down on the Friday, because I know I've been rocking it all week, and that Friday is the time where you've over risked, you lose it, you revenge trade, you've lost all your profits for that week, and you're feeling like absolute crap.
And then you've messed up your weekend then too, right? So all your mates are having a great time.
Not just that, you've messed up your wife's or your girlfriend's weekend as well, because they're dealing with a grumpy son that they don't want to deal with. So
exactly,
it is one of those.
We talked about this. We talked about right before the interview. We talked about how a lot of people are break-even traders, and I think it has a lot to do with overconfidence. They get that winner, and it they hit that range high of the equity curve because they have a big winner, and become overconfident, and they take 5 more trades. Of course, it's going to be 5 losses in a row, right? Now they're back at the low of that range, that equity range. So I feel like what Michael talks about here, the idea of identifying, basically identifying your emotions, right? Are you fearful? Are you euphoric? Are you overconfident? And then try to find that mental balance. Now for Michael, that is, taking a walk in the woods. And that's the same for me. Like when I feel like when everything's just going well, I know that there's just a matter of time before it doesn't. So it's best just to, take that break, make sure it's you're mentally balanced. That's definitely a key.
I think it's important to stay humble, to have that humbleness in the market, and to have that respect for the market. It's something similar to what sailors have when they go out at sea, right? They know they can navigate the seas, but they have like a healthy fear and respect for the sea. And that's something you need to have in the market. There's not something, I'm the king of the market. When you get to that feeling, that high, you're gonna be in trouble soon.
Yeah, it's,
Michael. Now we've gone through obviously a lot of different, mindset things, talking about different theories and things like that. I would like to show people a little bit about how you've changed from being a trend trader to more like a revert to the mean type of techniques practically. So maybe if they are playing around with different things, different techniques that they can learn just to get in, or different targets and things that somebody can take.
Sure. Yeah,
I know you've got the euro-dollar chart open.
Well, and I can go through a couple examples of trades that I've opened now and trades that I've taken recently. But for me, and I've talked about this before, and it's the commitment of traders report. So the idea is that if I'm going to be revision to the mean, if I'm going to try to pick the other side of it, I want to know when and where other traders are going to have to exit their position, right? One way to do this is with sentiment. There's a bunch of sentiment indicators out there, and I think that's fine, but people can say whatever they want. I want to know where people are positioned. And you can do that with the commitment to traders report. So I guess a bit of history, because I do feel like I am the old man around here, but the commitment to traders report is an idea in which, I'm actually going to grab another chart too and push in. There was people in 1800s to try to corner the silver market. And their idea was if they just owned everything in the silver market, they could then decide what the price is and make billions of dollars. So after that, the exchange released rules in which if you are over a certain size and you're over a certain amount, you have to declare your trades. Now we're talking futures instead of CFDs, but the futures market is going to move the CFD market as it's going to be a larger market. There's going to be more money kind of flowing in there. And the idea, sorry, I'm grabbing something else here too. The idea is that if we know where everyone, let's just use a great example. Let's go to the yen. If we know where everybody is, then we know where everybody can be wrong and where they have to exit. So the best example I try to give for people like this, because a lot of people know meme stocks and a lot of people know GameStop, and you may saw me bring that up for a second because that's moving again. The idea here is that if everybody is short a stock and that stock starts to move higher, you need both of those. If everyone was short Bed Bath & Beyond, now it's gone, right? So the shorts won, good for them. If everybody is short a stock and the stock starts moving higher, then those people need to cover their short to get out, and that creates buyers and so on and so forth, right? So my plan was to say, okay, I need to find where the buyers are and where the sellers are and who is going to be caught offside. So just a quick look at what this chart is. Let's ignore this bottom pane. Get rid of this top pane. So the red line here is the commercials. These are the people who essentially they declare on their taxes that they're people who are using this future or this currency to hedge against something that's going on in their business. So this is the yen. So maybe they sell or they buy from Japan. They're hedging that in some way. The green line is your large speculators. These are guys who own or short a lot of contracts in this case, because it's a future. And then your blue line is your small speculators, your little guys, the retail guys like us. The idea when I see something like this, where it's on the yen, where all of the large speculators, the people who are just taking shots, we know most traders lose, they are incredibly short the yen as the yen is hitting new lows. And we know the Bank of Japan came out and said, we're not going to let you guys bully our currency forever, right? You need to, at some point, like we're going to step in. But everybody was short the yen. So in this case, it would be long USD JPY, right? If we're talking about the CFD contract. Everybody is just caught offside. So when this move occurred, you can see that there was some covering. So this ticked up. If this gets to zero, it means the large speculators are flat. So some people covered their position, but still not many. We are still as short, if not more short, than we have been. This chart's going back to 2018. We are more short than we've ever been on the yen. So then I take a look at the chart. I've actually got some trades on here now. Let's get rid of some of these. I take a look at the chart. I did initially get a trade. This is the daily chart. In through this initial flush when the Bank of Japan stepped in.
Sorry, could you change it to candlesticks? Because the majority, literally probably 99% of us look at candlesticks. There you go. That's easy to see.
So the idea, we talked about trend and levels, right? So now this has been in an uptrend for an incredibly long period of time. Something changed here. It's a bank at this point. I'm not going to fight a bank of the G7 country who's literally says we're going to push this thing down. So then from there, I'm looking to time my entry, and that's when I'll go into a 4-hour, and at the very, the very shortest, kind of a 1-hour chart. And from there, I'm looking at things like, here's anchored VWAP to see if there's going to be a level here. I'm going to watch to see if this breaks to punch in. I'm simply drawing that, hey, this is where we reversed last time in this area right here. Maybe I want to start taking some shorts below this level. And if we break, we get up. Because the idea is that if this continues to move, I know for a fact that there is a whole lot of people that have to get out of their USD JPY short or their yen long. I don't have to speculate about that. The other thing I'm going to show here is that this is actually a chart from a buddy of mine who's All-Star Charts, JC Peretz. He's CMT. He's been doing it for a long time. And this is Bitcoin. So if you guys want to talk about crypto, because I actually have a pretty large, I got out of most of the position this morning, but a pretty large Bitcoin long on right now. And the reason behind that was this is the commercial hedgers. So this is the guys, again, who are in the know. You fade the speculators, you go with the commercials. And highlighted in green is every time that the commercial hedgers have flipped long. And they flipped long, right? Nothing really happened here. But in the trend, there's a couple times that you had big pushes up. So you see that as well. They flipped long last week. And that was actually the other chart that I'm getting that I could bring right here. This is actually from that Jason Shapiro gentleman that I mentioned. So the blue, again, is the large speculators. They piled in to shorts last week. They got very, very, very short. I ignore the small speculators in Bitcoin just because the little guys have gotten Bitcoin right where the big guys have gotten Bitcoin wrong. And then this little red line is saying that for the first time, the commercial hedgers have got net long Bitcoin where everybody else is short Bitcoin. So I definitely don't want to short. So I want to get long. So again, that's the premise of the trade. But then we got to go into the chart and we got to start, having a plan here. So I noticed that this area right here, which is the anchored VWAP from that last low, this area, give or take, and we can go just looking at here. This area was support right here. So pretty much all weekend. You guys notice I'm talking fast. I'm drinking coffee because I was up a bit. I was buying Bitcoin in here, and then I was selling a little bit out here, and then I bought a little bit in here, and I sold because I'm trying to trade around a core position. And then this morning I woke up and I had 3 Bitcoin. Well, sorry, I have 2 accounts. So I had 5 I had a bunch of Bitcoin. And then most of it got sold out in this level right here. And now I'm holding on to a little bit, knowing that I have now paid what I call paid for the trade. If the Bitcoin reverses and it comes back down here, I still made money on this Bitcoin thesis, but I'm really going to try to go for the guts on this one and see if we can get
make a higher high.
Yeah, into these higher highs. And if that happens, that is going to be a big trade. So but the trade arounds, the smaller trades on the lower time frame gives me that confidence. Because again, if Bitcoin reverses, I've got a break even stop. I've made money on the trade. Whatever happens. The realized gain that I have right now that I'm looking at, that would go away and that would kind of suck. But the money has been made. But now I know that, yes, there is a lot of Bitcoin shorts that have to be covered if we move higher. So that gives me the confidence to say, okay, now let's go to maybe a daily chart or maybe a weekly chart and just see if this downtrend can break and we can push up to new highs. So that's 2 trades.
Where do they extract the data? Is that on-chain data? So they track the on-chain data and then they just put it into a chart. Where does all this data come from for crowded market reports?
Bitcoin futures. So this is all publicly available, free, absolutely free data that you can grab. And again, it started because I forget it's JB Hunt or something tried to corner the silver market way back in the day. So everybody has to report. It's the same with short float data. So again, with stocks, what I do a lot of is I look for stocks that are heavily shorted that are then trending up or giving an area to trend up. Because again, this is publicly reported open data. What we do at Trade Ideas a lot is we can just scan that for you and say of, the 10,000 stocks out here, here's a bunch of them that are heavily shorted and moving higher. So I'm looking for those because you need a reason for the other party to take the trade. That's what I always look for, is if I'm long Bitcoin right here, why are other people going to buy in? One of them is that people think Bitcoin's going to go higher. That's great. I can use that. But what I like better is that they have to cover. And if you're short Bitcoin and it starts to rip, you have to cover. And it's not, you should cover. It is the broker will knock on your door and break your knees if you don't cover, right? It's like, and that's the best kind of buying is when someone's forced to, or selling is when someone's forced to.
Basically, you're saying like when someone's knees are about to get broken, that's the best time to enter the market.
Best thing.
It's a good trade, yeah.
When there's blood in the streets, right?
Yeah.
So basically, Michael, what you do is you use the COT report, right, to identify if they are if they're going to be players in pain, right?
Right.
And then you use the anchored VWAP to identify where they're going to be in pain, right? Is that correct? And then you trade the other way.
Yeah. So the anchored VWAP, and I'm going to give a shout out again to my buddy Brian Shannon. Wrote a great book. It's Maximizing Trading Gains with Anchored VWAP. And Brian's been he is one of, like, you guys on YouTube, everyone on YouTube in trading kind of owes a debt of gratitude. He was one of the first, before it was called YouTube, before it was bought out by Google. He was making videos on YouTube back in like 2005. This guy's been doing it forever, and he uses this anchored VWAP. So for those who don't know, and it may be, I talk about it because it's a common tool in the equity world, but maybe not in the FX world, is moving averages just summarize the amount of closes. So a 10-period moving average is simply the last 10 closes divided by 10. That's all it is, right? Anchored VWAP, or VWAP in general, shows not only the moving average, but also volume associated with it. So if there's one candle that did a whole lot of volume, that's going to move a lot more, right? If there's, one candle that did no volume, it's not going to put as much weight on that. But really what it's telling us is where the average market participant is. So let's just do a simple example here. If you started to buy Bitcoin at its all-time highs, where I've just anchored that VWAP to, and you bought Bitcoin, you put $1,000 into Bitcoin every day from its all-time highs, this is your average price right here. It's like 66,000. So it shows where the average market participant is for any given time frame that you decide to anchor it from. So the idea is then I can kind of detect and say, okay, are these people making money or are these people losing money? And it's scary how often it will act as support and resistance. But for me, it's more of this sentiment indicator. If we get above this 66,000, that means pretty much everybody in Bitcoin world is making money. And also means everybody who is short Bitcoin is losing money. So I'm using those to try to find the pain points with the COT data that tells me where people are pushing it. And I did see someone just a comment of, oh, the COT data is only going to give US. That is true, but I will also say, right, the US is the largest market with the most money in it. And generally speaking, you won't have everyone in the US short Bitcoin and then everybody else in the world, long it, right?
It's a reflection of the rest.
Right. So it's the biggest, but and by a long shot, by triple, quadruple other countries out there. And I'm Canadian, so it's not like I'm, saying rah rah America. It's the biggest and the most liquid market out there. And then, it's going to be representative to what you're going to see elsewhere as well. So, so it's find where they are, try to guess where they're going to start buying and selling based off the basics of technical analysis we talked about earlier. Take my position, hope for the best, right? If I'm wrong, I'm going to lose. So on this Bitcoin trade, if we lost this little zone right here, I would have been out and I would have stopped buying until it found another little zone. And, probably try it again down here or something like that. And I would lose this amount. So I started buying at around 60,000. I was risking to like 59,000. So that little area. And if I'm right, I have a order at 85,000, not to hype everyone up, but I highly doubt I will hold it until that period of time. But if we can pop through highs, we could get a surge of this covering. And I want to be positioned for that.
Yeah, I mean, if Bitcoin breaks the highs here, then we're going to see a massive move. I'm almost certain. I mean, I can't use where this as certain. But I mean, if
Yeah.
Bitcoin after breaking the highs a while back, now consolidating, people are getting a bit bearish, and then if it breaks the highs again, I mean, there's going to be a lot of force in that move, I'm sure. So that
Well,
target
yeah.
of 85 might sound high, but it's actually not really that far up.
And we know that, right? We know, like, that's the thing I love about this data is we know that last week as Bitcoin fell, people shorted more. So we know everybody is net short, except the little guys and the commercials. So yeah, we don't need to guess that there's a lot of people short Bitcoin. Right? They have to report it, or Uncle Sam comes and ships them off to somewhere.
The other question I would have for what you described, Michael, is how do you decide where to anchor the VWAP? In this case, you did it the last time it was made all-time high, but let's say price hasn't made that recently. How do you decide what drives that decision? Where do you anchor that VWAP?
So
Or do you have a certain rule about it?
Yeah, so I'm and another, again, big shout out to Brian Shannon. You guys should really, I'm relaying knowledge from a master, right? I'll just put it that way. So check him out. But the major thing, especially with Forex and with crypto, is large events and major highs and lows. And the reason for that is that these want to be anchored in a psychologically consistent format. Equities, for example, I like to anchor from big gaps, right? So say there was earnings on Apple. I want to anchor it from right before those earnings, because I know if there's somebody who's placing trades, that's kind of the anchor point of when they started the position, if that makes sense. When it comes to crypto and when it comes to FX, it's a little bit less intuitive because there is no gaps. But for me, you notice I have volume down here as well, which is going to be approximated, of course, in the FX world. But the major highs and lows and large volume points, because that's going to show me where, if people started to initiate positions, where they're going to act, right? So this major low made perfect sense to me, right? And of course, the shorter term time frame you're in, the more precise you can get. But this one made a lot of sense to me because this was the area that bulls took control on Bitcoin as it was doing that kind of dramatic selling. The kind of one tip or suggestion that I will give is that just don't get really nitpicky with it. Same as if you're drawing support and resistance. You don't want to go, if you have to squint to see it, then it's probably not a good place to draw an anchored VWAP. For me, again, it's major highs, it's major lows, or major volume spikes where institutions, you could tell, really started to bite into.
Nice.
Interesting.
Nice.
I want to I want to talk a little bit about trade management, because you said you have we looked at Bitcoin and you said like paying the trader, but basically like you're paying yourself for taking that trade, if you will. And what about what type of, because we talked a lot about trade management before you came on, and basically my approach is no trade management. I feel like no trade management fits my personality much better, because what I've seen is as soon as I start managing the trade, my profitability goes down. Like my trade management is not good, basically. But I do also think that in the back of my head, my future of trading is working on trade management. So what type of tips would you give to someone like me who has it works without trade management, but I kind of want to I want to add it to my trading, basically?
I think trade management depends a lot on what you're trying to get out of it. So if I was purely a day trader or an intraday trader, I don't think I would. I think it would be, I'm going to take the trade, it's stop loss, profit target, and whatever happens, happens. The way my trading works, and you can see it if you look at my equity curves with the 5ers, is that I am taking small cuts over and over and over again in hopes for a large gain periodically. So for me to survive those small cut periods, what I'm doing is I'm splitting my overall risk into generally halves or thirds. So say, just make the math easy. Say you're okay with risking $1,000 on the trade. You may say, okay, I'm going to take a position. I'm going to risk $300 on the trade. You know, my first position in Bitcoin was, I think, right in kind of this area right here. It came down, it undercut support, it bounced back up, it kind of held it. That's going to be my first trade. My stop's going to go down here, and that's risking 1/3 of whatever I was comfortable with. When it came back down and it held again, and then it bounced, now I'm to the point where I want to start to play around with a second position, and I open these separately as opposed to selling half or something like that. The idea is I want to try to trade around that position to gain a buffer so that I can really hit it out of the park. And the other part of it that I have to always worry about is the rules around, that you guys do that, absolutely should do as part of the risk management of the 5ers, but the one being that 5% kind of loss daily. For an intraday trader, it just means you shouldn't lose more than 5% of your account in a day, right? You just shouldn't do that anyway. But the way it's calculated for me as a swing trader, if I have a massive position open and that position just comes back to even, and even if I get stopped out for a profit, there's a potential that I violate that rule, right? So that's
Well, you
something
mean it's following your equity,
right?
It's
So at the end of the day, say I'm up, just again to make the math simple, say I have a $100,000 account, I'm up 5K on a Bitcoin trade. I need to be cognizant about that, because if that just comes back to even, then I've violated that rule, even though the trade was a good trade. So I have to think about things a little bit differently. If it was my own account, I'd probably just take the trade and put out the stop loss and then let it go to what I think it could go. But I need to be cognizant of this. So that's why I may open multiple trades where I'll sell one to realize a profit to then make sure if that the other one comes back, I'm still within those rules, right? So, part of it, and again, if you're trading, this is no knock at all against, I've traded prop for a long time. I find people who complain about the rules it's generally something else that's going on. It's not the rules that are out to get you. But I need to be cognizant of that as a swing trader. Otherwise, I would just let things breathe a little bit more. And then the other part is the psychology. If you have a hard time holding on to winners, it does make it a lot easier. Again, I'm looking at this Bitcoin trade and I have it in 2 accounts and I'm up a fair amount on it. There's that inkling to say I should close it. I'm up pretty good. If I were to summarize these 2 trades, it's a good trade. It's a good amount of money. But I want to continue to hold it in case. And knowing that I've realized profit outside of that just helps that psychologically. I'm like, okay, if it comes all the way back down, yes, it sucks that this big number turned to 0, but I did a couple small numbers that kind of help with that, if that makes sense.
Yeah, it's definitely easier.
Something I've got to.
No,
Well, all 3 of us all at the same time.
I think I was first there. I think I was first.
Ooh, I got him.
No, actually, I'm terribly sorry, but I forgot what I was about to say. I think Victor is second.
Typical, isn't it? Isn't it just typical?
I was gonna say what you're doing is you're taking those other trades that you're building a little bit of a buffer, but you're actually putting yourself in a better psychological position to accept the loss, because you made that cushion. And it's not a loss anymore. It's a loss of profit, but not a loss in terms of from before you start taking that setup.
Yeah, again, there's a financial cushion, there's a mental cushion. I think both of those things are very important, where as soon as you can look at it and say, that's the trade. A buddy of mine, Chicago Sean, he swing trades options. He's been doing it for 30 years. He does the same thing where he will purchase an option and immediately put out an order to sell half of it if that option doubles, which if you have a good trend in the stock, that happens all the time. Your option usually doubles or it goes to 0, right? So it's not like he's making 100% on his account all the time. But his idea is that as soon as he gets out half of the position for whatever his risk was, it just makes his life, we talked about going for walks in the woods and clearing that mental headspace. It makes it so much easier to say, whatever is going to happen to the stock, whatever is going to happen to the trade is going to happen. Whatever is going to happen with Bitcoin, it's going to happen. If this goes to 85,000 today, I'm going to be very happy. If it comes back down, hits my stop loss, I'm not going to be totally bummed, and it's not going to hurt my standing with the 5ers, and it's not going to hurt the account value that I have, because that little bit that I put in. So it's a financial cushion, and it's a mental cushion. And just going back to day trading, there was a guy I used to day trade with when I used to day trade equities, and he would always leave just 100 shares of stock. He would usually trade 1,000 shares of anything, and he would always sell 900 and leave 100 shares of stock till the end of the day, and he would sell it. And one year he calculated what that 100 shares did, and it was almost as much as he made doing the rest of them. Now, most of the time, that position would come back and stop him out break even, but a couple times a year, that 100 shares of stock, that stock would just rip all day, and it would make him a bunch of money. But even though it made him almost as much as his normal trading, he's like, I still can't just buy the 100 shares and hold it till the end of the day, because the fluctuations were too much. So that's what I'm trying to do with these kind of trade arounds, is because I'm trading prop money and I need to be cognizant of that, is I'm trying to keep those fluctuations under control. If it was my own personal capital, I'm way more okay with those fluctuations. But again, it's prop firm capital, so I do need to be cognizant of that.
I think there's a lot of it. Go on. Unless you're gonna forget what you were gonna say.
I remember now what I was going to say. So so the rule of not losing, it's 5% per day, is it? 5% per day,
high stakes
Alex.
round. Yeah,
high stakes. Okay, so 5% per day. Now, to lose 5% per day on a day on an open position, that has to be a rather, at least in that has to be a rather big position. Yeah. So I'm thinking that is this something that are you ever getting close to that, or because for me it would be almost impossible with the way my risk management looks like to lose 5% in a day, unless stop loss doesn't get hit in an NFP or whatever, right?
The larger the accounts go, the less I worry about that. The smaller I trade. The fact is, I usually have more than one position on. I have 4 separate ideas going at once. I try to make those somewhat uncorrelated the best I can. It's why I do this kind of trading and still do the equity trading, because I want all of my systems and all of my positions to be as uncorrelated as possible. Hope is when I'm sucking somewhere, something else is doing well. But there is always that risk that everything would go on. So we take Bitcoin, for example. So I have one contract or CFD or one Bitcoin or whatever it is in this account. Is it possible that Bitcoin just completely falls apart? Like, absolutely. If I'm trying to hold to say 85,000 and my stop loss is now 60,000, then there is certainly a potential that, while I'm sleeping or something happens, you have a massive spike and then a massive collapse in these currencies. So for me, it's, I was, fully upfront of the amount of counts I blew up to get here, but now I'm here and I don't want to leave. So it's like, I always just want to make sure that there's nothing. So part of my plan has to be always thinking about the what ifs, right? If there's, again, as an old man, I've been around for a long time. There's When Genius Fails is a big book about long-term capital management that not only they thought was, they were a quant fund. They all thought they were printing money all the time, but not only did they blow up overnight, they almost crashed the entire U.S. economy and maybe the world. There's many things that can happen. I trade through flash crashes. If you want to watch a hilarious video, you can go on YouTube and you can hear a guy live commentate the flash crash. I think it was 2000.
I've seen that.
Yeah.
The entire market dropped like 30% in like a minute, and then it came pretty much all the way back. I was trading, so I've seen a lot of, and then with Bitcoin, right? There is nothing stopping this Bitcoin position from ripping into like 70,000, and then that tick over happens, and then it comes back down to 60,000. Again, I need to make sure that I'm not violating that rule, even though, again, the stops break even. I think if I take slippage, I'll lose like $100 on the trade. Like it's a tiny trade now, but you gotta understand the rules, right? You're trading someone else's money. You gotta understand the rules and make sure you're playing nicely within them.
Yeah, for sure. Okay, Michael.
Yeah.
So we've it's been an hour, and thanks a lot for coming on here. This was honestly very good live stream today. I've been going through the comments, and people really seem to like the stuff that we've went through here today. So I'm gonna add
1,500 people 1,500 people looking at us now as well. So obviously, if you want to
Hello, everyone.
plug any of your YouTubes, any of your Instagram,
I'm gonna be
social
adding
media.
Yeah, I'm going to be adding the links to your Twitter and your YouTube channel. I'm going to be adding that in the description of this video. I've also added in the comments. So and then you have, so what's this? Stats Edge Trading.
Yeah, I have. I don't have a Discord or any of those things. I have a Substack where you can sign up here. StatsEdgeTrading.com. I have a free trading course, completely. You don't need to put in a credit card. There's no strings attached. It's actually with my wife during the pandemic. We were both locked in, and she's a dental hygienist, and before that she was a flight attendant, so she had no idea what I did ever. So when we were locked in the pandemic, we sat down, we did 39 lessons of what is a stock, right? Talking about different markets, technical analysis, fundamental analysis. Again, completely free. Nothing to sell you there. So if you want to come check out the website, absolutely do that. And that links to my other socials. But to be honest, not to sound conceited, but if you Google Michael Noss CMT, you'll find all the stuff I do. I've got
because I did just Google that, and I did find a lot of stuff.
Again, I'm an old man. I've been around. I've spoken at a lot of events. This was a lot of fun.
I love that. It's like, how can I learn more about you? Just Google my name. Just Google my name. You'll find it. No, but Michael, thank you a lot for joining here today. And I would love to maybe look at some opportunities in the future to sit down and talk more about, go into the charts, talk more about advanced technical analysis. I would really love to do that.
Just
talk about
my Twitter. And when you're
done.
When you're done your CMT, you're going to need a sponsor. So definitely hit me up on that. I'll sponsor you for that. But yeah, you guys know how to find me. This was fun. This is kind of what I do. I sit around, I look at charts, and I talk about charts. So
that's what we do all day as well. That's why we're here.
It's been a blast, guys.
All right, Michael.
Thank you.
Later.
Take care, Michael. All right, that was
wow.
Great.
Should we just okay? The elephant in the room. Thank you, obviously, to Mike. The elephant in the room. Should we say it?
Is it you?
Forex funds? What the hell? No, I'm not the elephant in the room. But True Forex funds. What's this on Twitter?
Yeah, usually we don't. Usually we don't talk about other prop firms.
I'm definitely talking about this. Like, when did this?
Yeah, but that's because you're not in the office, so you can. No, but So True Forex funds. I'm sorry to say this, but it seems that it's another prop firm closing down. And it really sucks to see, because we know that there's going to be a lot of problems from this. A lot of people pending payouts are gone. I mean, I don't know about that. Hopefully they have money backed up to actually pay people, but it's unfortunate. It sucks. You have, but guys, like there's a reason why I'm working for the 5ers.
I've never liked this prop firm, and I wouldn't never say that until now. But I've never liked this.
And guys, I've never. Okay. So.
Okay. Yeah, we're not going to go into it too much, but
I just want to say something. Like, there's a reason why I'm working for the 5ers, right? And there's a reason why I got funded with the 5ers, because when you look at the prop firm industry, and I'm not saying this as a 5ers employee, I'm saying this as a trader. There's two companies out there. There's the 5ers and FTMO, okay? And then there had this huge boom of prop firms like last year, where you have literally hundreds and hundreds and hundreds of prop firms and influencers, you starting prop firms. Guys, when you choose a prop firm, maybe don't choose the one that's been around for 2 weeks, run by one guy. Okay, be careful. Like, you're gonna spend money, you're gonna spend a lot of time, you're basically working for that prop firm. So choose carefully, right? Choose carefully on the firm you're choosing. I'm not saying go buy the 5ers. I'm saying choose the firm that you trust, and because you're gonna spend a lot of time with them, right? But this sucks. This sucks. Whether you liked true forex funds or not, there's a lot of innocent people getting hurt.
Yeah.
A lot of money being lost here.
Yeah, it goes to say what is important for you as the trader. I mean, of course, a lot of people look at discounts and price and perhaps rules, which is more lenient, whatever. But in the end, does it really matter if you're not getting paid, if your company goes under? I mean, what do you gain from that? Nothing. So it's better you choose well, choose a company, an established company, than going just for lower prices or whatever that attracted you to that prop firm.
Yeah, I think there was somebody put something on Twitter recently, and I actually quoted it and actually wrote something on top of it. Is because there's a lot of traders that you could see very boom and bust type of trading, and it's us as a firm to make sure that this boom and bust types of trading doesn't actually reflect and go on to the funded accounts as well. And sometimes it's all about helping a trader that when they are funded, to making sure that they stay funded and making sure that they're not blowing accounts and over risking. If you are looking for a firm that you want for the long term, then you need to understand that the industry needs to understand that these firms have to make sure that they've got good risk management in place. Super low prices, super big discounts, and lack of risk management, and that's the recipe, unfortunately. And it is a shame.
All right, guys, it
is a shame. But I'm going to get the giveaway ready.
I've been drinking a lot of coffee, lots of really good coffee, Ethiopian, very nice coffee, but that means I'll need a 2-minute break. It's a quick break, and Alex will take care of the giveaway link, get it all set up. But guys, you have to like the video. You have to like the video. You're not liking the video as much as you've done in the past, and this was a really good live show with Michael. Show Michael that you won him on again by hitting that like button, and of course as well, we're gonna give away more accounts the more you like the video. We're at 600 right now. Can we get up to 700? Probably not, but we'll try. All right, so hit that like. I'll be back in a minute.
I'm going to put on the nice little trade we've got on DOT and see if we can get to take profit. There you go. And we're going to watch this and see what happens until the same thing we do in Forex is just working amazingly on crypto as well. If you just have a look at that and we just take, it's just super by the book, trading exactly. Victor, when you look at that, is exactly what I do in Forex as well, and it just in crypto it's just beautiful.
Well, to me it's price action, and price action, you see it on every asset, more on ones than others, but you still see it everywhere. It's the same with supply and demand. You will, it's something universal. Price action is universal. It's actually psychology of the participants, and that is something you have with every asset that's being traded. So that's why I like price action strategies, because they tend to work better in time and through different assets.
Yep. What did you think of everything that Michael went through? The Pepe.
Yeah, how's the Pepe doing? You're in a position there, or
no? I was that was my position. That was my position. That's my little position that I had. Was it on Saturday? No, that was Wednesday. Let me have a look.
I see. Because it's going rocket right now.
Yeah, I didn't catch that move. No, I did not catch that move. I caught a very, very small move in this whole break and retest type of price action. You see all of this. This is like, you know, a typical break, a nice rounded retest, and I wouldn't be surprised if we eventually have something where we break these highs. We have that. I don't know if I've got that technical analysis tool. Let's have a look. You know, you got all of this nice curve here. Oh, so much. That really nice curve. And normally we'd have the breakout, you'll have the retest, and then you'll have a continuation for another leg. And that's what you've probably got on Pepe. It's just, I was on a spot position, the most I've ever made on an actual punted spot position, which I was bought on Gate.io. I bought in this level here, and I actually got out around about here. It was probably one of the most I've made in an actual trade idea that I haven't been fluky on. I made six times my risk.
Nice.
And that is it. But now we're in this dot trade, and then I'm getting the giveaway sorted. But I like that he's a crypto trader as well. It's nice to see. It's nice that he's got confidence in crypto and everything crypto's doing.
Because, I saw you cheering up when he said he had a buy
like,
signal.
Go, please. I'm like, yeah.
That was very interesting seeing how he looked at the institutional positions on Bitcoin. We're probably gonna have probably gonna have Dirk on Wednesday as well, so we're gonna talk a little bit about Bitcoin as well. We have GBP USD is actually kind of peaking its head above that level right now, so I'm hoping it's gonna take a while for this. For me, it's gonna be a swing idea, so it's probably gonna take a while. We have the link,
GU?
by the way.
You're mentioning GU?
Yep.
Yeah. Can you send the link in private?
Yep. Let me just making sure that is there.
Man, I gotta see over the my neck is killing me here. I gotta look over the is it called ergonomics, right?
What's that?
It's called ergonomics.
Yeah, like the way your screens and everything is positioned to make sure you have good.
Yeah, I've got to do that as well. I'm gonna.
Yeah, because
I know people say about screens and stuff, but I gotta add another screen.
No, I'm saying like the like my neck is hurting. I gotta make sure I'm in the right chair and everything. My chair is like really expensive, but I'm not sure it's good, which kind of like sucks.
Let's have a look. Okay. There's a link.
No? Okay, there. What's the word?
Typical, isn't it?
Nice.
Just original. We've used this one quite a lot, but
How many likes do we have right now?
649.
So let's see this channel that this trader is talking about. Maybe he's looking at that channel with the top of the channel. But you know what? Channels are there to be broken, my friends. We are breaking channels there with this huge position. just everybody's going to be looking at all of that liquidity and be like, nope, we are busting up. Doesn't really look like that at the moment, but yeah.
We have the giveaway link is in the comment. You can see the pinned comment, and the secret code or the secret word is BTCBYY. Is it BYY or BBY?
BYY, baby. Oh no, it's supposed to be BBY, but it is BYY.
Yeah, that's what I'm saying. Like, yeah.
No, we've got you guys, don't put it in the comments, because that's not going to do anything. It doesn't work like that, unfortunately. So
okay, so I gotta go in and mute it. I gotta go in and mute. B2C BYY. I gotta go in and fix that.
Victor, where do you see EU going? We've got a question.
Up.
Yeah, it's it's grinding up. I'll put up my screen once again. This is basically what we have. We have a very large on the weekly. We are getting into a supply area on the weekly, but if you look at from where we have been coming down, right, we have a quasi formation that has been. This is on a weekly, guys, so keep that in mind. We do have that would be the head, the break of the structure, the right shoulder, and then a move down. But if you take from our last swing low and all the way this up, we are currently the right shoulder. We're only now, even though it feels like a lot, we're only now reaching that 50% retracement. So on the bigger picture, this is not overextended on the upside yet. We are just now starting to get to the other side, to the above 50%. So I can see this going much, much higher. And even though we are getting into that supply area, right? And if you look at the swing, we had that swing down from, that was April the 9th. We haven't retested that yet, and I would expect price, as we have been coming from forming bullish structures, that what would stop price from continuing to go higher, that would be bearish structures on the relevant time frame, and that could be this weekly, of course, the one that I'm just showing you guys. But within that weekly, we still have a lot of room. Let's measure it. It's about, let's see, that's about 100 pips for EU. That is more than its daily ATR. So this can still have a lot of room to go up. And if we look at to the left of us, what do we see? We see a big handle that has no structure in this time frame. Even if you go to the lower time frames like the H4, you don't see anything. And that's what I see. That's what I look at. What has price done while it was going down? Did it leave some kind of structures that you could expect price to bounce off from? And we don't have that all the way up till here. So basically, we're leaving structures. We're breaking today if we close above this order block, right? This is a bearish order block that we are clearly that is not stopping price. So if we close above this today, the next stop that I see is this structure, this order block. Now the question is, how will it get there? It probably gonna be bouncing up and down before it gets there. But in general, my expectation would be that it's gonna have a easier time continue to go up than anything else, because I don't see anything yet. I don't see on the H4. There's no reversal pattern at all. We just switched back to a bullish market structure based on the H4, and we're talking H4. So this can last quite some time. Easily, we could see either today, although we don't have news for today, so I don't expect like fireworks today, but I could at least go retest this last high, which stands at around 812.9. And after that, maybe a break and retest perhaps, or maybe something that comes much lower to retest some structures below us. But in general, I don't see this going down. At least price action is telling us it wants to go higher. And you can see also there's a lot of signs to that. Look at how big these candles are, the bullish candles, and it's doing it again. So if if that's telling you who is in control, and it's clearly that the bulls are in control. And if you want to measure this leg, you could have some idea from what the next leg could be looking like. This is a 66 pips. And if we look at the last swing low, if we take that, 66 will put us at, this is not a prediction or projection. This is just
it is
measuring how far. That's 826.
We'll see tomorrow if that prediction is if. We'll see tomorrow, Victor, if you're any good at this. We'll see.
if you look at
do
the
your prediction.
ATR as well. Yeah, well, I don't. I think it has a.
Can we? You know what? Can we say a number? Can we say a number? At the end of tomorrow's live stream, where is EU?
Okay.
Let's say a number.
You're asking.
Where is tomorrow's live stream?
The end of tomorrow's live stream. That's at 3 your time.
I would say.
Oh, we're saying a range or an actual like a proper. Oof.
A number, a price number.
A number.
A number.
We doing a bet on this?
No.
I say 802. No, hold on a second. What is that? 8139.
Oh, that's a good one. 81. Okay. Okay, you said 8139.
Yep. 813. No, sorry. Yeah, 8139. Yeah, 8139. Yep.
Okay.
I don't have anything to go with. I know that at some point this will reach that 66 or most likely come into the range. But the question is, what will it do at that specific time that you're asking? And that would be after New York Open. I would say it'll be quite close to that. Perhaps I would say 836.1. Let's say that.
Yeah. So I'm thinking.
Okay, I'm gonna say 80.
It.
I'm gonna say 83.57 because that's where my TP is, and I think it looks like a good level where you might have it hit of the like 88 area, and then you get a rejection back down to my TP.
Okay.
All right, good,
interesting, nice.
So we're gonna do something different today. All right, we're gonna do something different today, guys. We need you to hit that. We need you to come up. You know what? No, I don't have time to wait for that. Let's do it. Yeah, I was gonna say like no giveaway unless we hit 700 likes. But
wow, after all of that alpha today, and we haven't got 7 likes.
It's low, man. That is low.
People. Really? Wow.
Yeah.
Yeah, we're gonna have to start turning on. Only subscribers can comment on the videos now. I bet that is even turned on. Okay.
Maybe the viewers needed some reminding because as we were interviewing,
that's true.
Michael,
I think so.
Yeah, it helps a lot to remind everyone to hit that like button.
I'm gonna pull this up now.
We're almost, we're getting close to 40k subscribers. We're less than, we're about 1,900k subscribers left to 40k, and I'm thinking we're gonna do something big when we hit 40k. We're gonna do some celebration thing when we hit 40. We should be hitting should be hitting 40 sometime next month, and I'm thinking doing a massive giveaway type of thing. I don't know. We can plan that. But yeah, make sure that you're not only liking the video, make sure that you actually subscribe to the channel. Party, I don't know. Live streaming party. Nice.
There you go.
Okay, so we actually had a
lightweight.
It's okay. So we actually had a good comment. Why don't we reset the loyalty points for the winners?
Because it's for the winners.
Yeah, so they can't win again, or it's going to be more difficult for them to win again.
Yeah, that makes a lot of sense.
Because
Which means we have to go through every single winner and just. I will do that. I will go through every single.
But we
winner
don't have to
and
do like we don't have to go back and do it. We can start
I
from
think
today.
you-
You know.
Okay. I'll go through all the winners, and all the winners I will.
Wait, no
take
way,
them
Fernando,
out.
you won! Congrats, man!
Nice.
Not only did you win an
Congrats.
account, you're I'm getting that coffee ready for you as well.
Ooh, very nice. very
Congratulations,
nice.
Fernando.
Congratulations.
Alright, so now, what I want to
Everyone
see,
on
guys.
that list, congratulations.
So in a couple of months, what I want to see is I want to see that you're on track to actually passing that evaluation. I'm not saying that you're going to pass in a couple of months, but what I want to see is in a couple of months, I want to see that you're not blown this account, especially you, Fernando, because I you know, you've been around here a lot. You're a big part of the live stream, you know. So make sure you don't lose this account now. Okay, take it easy. You risk small. You get used to it, and yeah, keep at it. Get funded. I want to see you getting funded, man. And if you need any help with that, you need to. Did Fernando win an account for Tradelicious as well? Did he?
Tradelicious don't do 100k accounts. So
yeah,
I don't know, maybe 20k, but definitely not 100k.
All right, guys. Tomorrow I'm going to be talking about Fibonacci. I'm going to do a. Why would I repick? Never mind. Okay, so tomorrow I'm going to do a presentation on Fibonacci. I'm going to show you, a brief introduction to the Fibonacci retracement tool and how I use it in my trading. I'm sure it's going to be very useful for you guys to miss out that one. It's going to be a short. It's going to be a shorter presentation, 30-45 minutes, and then we're going to go and we're going to do some live trading. So it's not only going to be a presentation. We're also going to be looking at our open positions and looking at the market to see if we have any trades going. All right, guys. Thanks for joining today, and we'll see you all tomorrow.
I'm not going to be here tomorrow, by the way, so I'll see you guys on Wednesday.
All right, guys. Take care, and all the best.
See you in the next one.
Hasta la vista.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the